How's it going, everyone? It's Sam. Today we are doing the next installment of the Dividend series where I invest $100 a week. And before we even get to that, I want to talk to you about how you can make $1,000 a month in dividends and what companies pay you what amount and what it would take, how much would it take to be invested in these companies to get $1,000 a month in dividends. So if you haven't seen this video before or the series before, I'm investing $100 a week into dividend paying stocks. Now I'm doing this because at the age that I'm at, about 25 years old, by the time that I reach 60 years old, based on normal market returns, I should have a portfolio worth about $1 million. And the reason I'm doing this is because I want to show people you don't have to invest really large sums of money to be able to retire, and you don't have to try to time the market or anything like that. You can just consistently invest $100 a week and you can retire a millionaire. Now, I am picking dividend stocks for a couple different reasons. I have other portfolios with dividends and I have other portfolios with growth stocks and index funds. But for this, I really want something that is stable, that I can kind of predict the amount that I'll get paid out. And a lot of companies have cut their dividends recently, but dividends are typically a lot more easy to track and a lot more consistent than general growth in a stock or appreciation. Usually companies want to keep their dividends where they are because a lot of people rely on them. So we are not the only ones that are doing this. We have two other partners in crime, JT Wealth and Logan Fisher. The links to their channels are in the description below, just as always. And if you do want to invest in this and follow us as we go along, you can invest your own amount, but you can use the link down below to M1 Finance. I really like them to invest in for this kind of series because they allow you to invest one time a day, so you're not worried about the price or anything like that. You are just investing consistently, and it kind of holds you to that. You can reinvest dividends too, which is really nice. They have a couple nice features, but their link is down below. You can check them out. So I will show you the stocks that I bought this week. Towards the end, I will show you where the portfolio is sitting. But let's take a look at how much you would need invested in each of the companies that I own to get $1,000 a month in dividends. I picked this number because $1,000 a month is pretty significant. I mean, it's that four-figure barrier that I think is a big mental shift when you start to see four figures going into your accounts based on just dividend investing. So let's take a look. I have about 9 different companies here, and they all return different amounts. They all have different angles to them. They all have different business models, but let's take a look at each of them. So first of all, for Disney, they pay a 1.42% dividend yield, and this is just based today, so it might change by the time you watch this. So you would need about $845,000 to be invested in them to get $1,000 a month. Now, for this company specifically, I don't hold them because of their dividends. They actually pulled them away recently and they plan on bringing it back, but you never know, especially because they're going to focus on streaming more. But this is not a company that you buy for the short-term dividends. This is not a high-yielding company. By any means, it doesn't pay a lot of dividends for what it is, but there's some room for growth because I think they're going to be able to continue to expand their streaming service, and eventually, if they want to, they can pay larger and larger dividends. So they are one of the lowest dividend yields on this list, if not the lowest dividend yield. However, if we go down to JP Chase, one of the premier banks here in America, you can see they have about 3.56 dividend yield, and they are able to just take about $337,000 to give you $1,000 a month in dividends. Now, all these companies pay out different schedules. Disney is twice a year. JP Chase is 4 times a year, and something like Invesco High Dividend or Realty Income pay every month. So you would be getting different amounts in different times, but JP Chase takes only about $337,000. And they typically raise the dividends, so they've been pretty good about increasing their dividends. So that is something to keep in mind, that while it might be $337,000 today, if you invested, let's say $300,000, in a few years they might increase the dividend to be able to actually pay you $1,000 a month. Now, going down to Realty Income has decreased in price a little bit, but their dividends have stayed strong, so their dividend yield is going up. 4.6%, you would only need about $260,000. That would be very nice to see going into your account because it does pay monthly. The next company is Foot Locker, and they have decreased their dividends recently. They had a very high dividend yield, so if they're able to bring that back, that's going to be awesome. But if we look right here, $393,000 would equate to $1,000 a month at a 3.05% dividend yield. Store Capital, one of my favorite REITs or one of my favorite real estate investment trusts, because of the fact that they actually lease to lower grade tenants, they are able to get a higher yield, and they have about a 5.18% rate of dividend yield. So they would need about $231,000 to be able to get you that $1,000 a month. Now, AT&T is the highest yield on this list at about 7.6% right now. Now, you would only need about $158,000 to be able to get $1,000 a month. That's kind of crazy. I mean, that dividend yield is really high. They have continued to decrease since the pandemic started, and they really haven't recovered at all. So AT&T is about $26, $27, $28 around the time of this recording. You'd only need about $158,000, and you would be getting $1,000 a month. Innovative Industrial Properties, one of my favorite REITs, that is kind of a niche REIT. Try saying that 5 times real quick. Niche REIT. So they pay about 3.15%, but they increase this drastically pretty much every year. They are being able to increase this dramatically as they acquire more tenants and more properties. So they are giving out about 3.15% now. I would not be surprised if they increase this. They were around a 5 to 6% dividend yield when they were at their lowest point this year, but they offer some growth and a nice dividend. Invesco High Dividend Yield, SPHD as it's better known, they pay about 5.46%. They hold a bunch of other companies inside them, and they do hold about a 0.3% expense ratio, but they pay 5.46%. You would need about $220,000 to get that $1,000 a month, and they kind of spread the risk because they hold so many different companies. The last one here is Qualcomm. They are a semiconductor company. They pay about 2% right now, so you would need about $603,000. Now, between all these companies, if you had equal amounts of all of them, you would need about $381,000 between all of these different companies to get to that yield of about $1,000 a month. Now, personally, I am weighting these in all different amounts, so I would need a different amount than $381,000 because my yield is not split up between all these companies equally. However, this is what the portfolio is looking like now. Disney, we are down a little bit on overall. JP Morgan Chase up. Realty Income about even. Foot Locker about plus 29%. Store Capital and AT&T are down. IIPR is up. And then these two are up also. So overall, we're sitting pretty, I guess, at 4.5% up. This doesn't account for dividends. We've earned about $10 worth of dividends so far, which is kind of awesome. I mean, again, we are in week 17, I believe, of this series, and that means that we're only 4 months in, and we have a good yield. We have a good amount of dividends here. I did buy 3 new stocks this week, so I'll walk you through that. We bought IIPR, so they are continuously buying more properties. They are a medical, I want to be careful how I say this. They are a Mary Jane REIT. So they buy different buildings and then the companies rent back from them. So they are generally companies that are looking for a cash infusion to be able to scale and grow because a lot of them can't work with the banks right now. So they sell their property to IIPR. IIPR then will rent it back to them at a pretty high price, and then they're able to expand. So IIPR has been growing a lot. They are a really good company for me and some of my other portfolios and have returned a lot and pay a nice dividend. So I want to add a little bit of a position here. Realty Income, just a solid real estate play. I bought $25 worth. That pushes me up so that I have just enough to get at least $1 a month. And I realize that doesn't sound like a lot, but I was getting about 74 cents and I just wanted to break that $1 barrier. And then AT&T is quite interesting right now because they are so inexpensive. There's $27.40 that I just want to increase my dividend from them because, again, they are just continuously seeming to go down. They are very inexpensive right now, and they pay that nice 7.6% dividend yield. And I feel good about all these companies just from an actual stock standpoint. Like, I've gone through a lot of these companies in the past videos, so I'm not going to break down why I like AT&T or why I like IIPR necessarily. I'm not breaking down the numbers as much because I've done that before. So I'm just breaking down very general ideas about the company. So hopefully you guys like this. Hopefully you got something out of it, whether it is just something fun like looking at what it would take to get $1,000 a month from all these different companies, or whether you are looking at what I'm buying and why I'm buying it. Sometimes it is a little bit boring, right? So we've been buying some of the same companies, but I'm not going to change up what I am doing just to be more exciting or anything like that. The dividend stock portfolio isn't always super exciting. It's just adding to your position sometimes. And sometimes you just have to fill it with other stuff just that is more interesting and a little bit more fun. So hopefully you guys got something out of this. Hopefully you had a little bit of fun. Thank you for watching. I appreciate it. If you guys want to check out the M1 Finance link down below, you can definitely check that out and start with M1 Finance. Again, it's one of my favorite brokerages for this kind of investing. I hold the majority of my money, over 50% of my money in investment accounts in M1 Finance between this portfolio and another one. Also, if you want to check out Logan Fisher and JT Wealth, you can check them out in the description. And if you want 3 free stocks from WeBull, I know this isn't a WeBull video, but they are giving away those free stocks for just a few more days. So if you want that, you can deposit $100, get some free stocks through WeBull. Thank you for watching this. Thank you for hitting the like button, and I will see you in the next video. Bye.